I think we
Hi,
can hear each
Michelle.
other. We can hear each other. We've had technical difficulties today, but welcome. Good morning, LinkedIn. We practically moved this into the afternoon, but we're still in Mountain Time. So, good morning to everyone on LinkedIn. I want to welcome you to Expitality Outdoors. And today I'm here with Bruce Hurta. We're going to talk about his story and every also what you need to know about SBA and USDA when the government's shut down. How about that for a title today? Okay, welcome. It's so good to see you. And Bruce is here with Business Finance Depot. And we've had some great conversations in the past. Today, I'm hoping you'll start with telling us just a little bit about your story, how you wound up providing financing for the glamping industry.
Okay, well, I'm an old banker.
I'm an
Uh,
old banker. Okay.
Over 45 years banking and small business lending experience. My background in banking started when I graduated from college with a finance degree, and my first job out of college was as a state bank examiner for Texas.
Oh, wow.
And from there, I went into banking jobs where I was credit manager at a bank and then moved to a commercial lending position where I did small business lending and then eventually was president of two community banks in Houston. And at those community banks, I learned about SBA lending because it was always challenging to do small business loans because of the risk inherent in a lot of those loans. And so when I found the small business loan program and the government backing on those loans that reduced the risk for the bank, that helped me do more loans for small businesses and made me want to be an expert in SBA lending, which I did become, and
Yeah.
eventually became one of the first SBA certified lenders in the Houston SBA district. And then went on to develop SBA loan programs at a couple different banks and a credit union. And eventually, I ended up working for a non-bank SBA lender out of New York. I worked for them for 14 years. And when I did, I had a national lending platform. I wasn't restricted to just lending in Houston anymore.
Mhm.
And we focused a lot on small business lending that involved real estate as the primary asset. Um, those types of SBA loans are longer term loans. They're for 25 years. Therefore, they stick around in the bank portfolio for longer and can earn more profit. And so that was a desirable loan type to go
Sure.
after and specialize in. And so in the business, we were encouraged to find industries that we could specialize in, focus on, and concentrate on, especially if they were real estate oriented businesses, small business real estate. Well, one day I noticed that my parents bought an RV.
Ah,
And I,
okay.
I
Now
had
we're getting to the story part. Yeah.
I had no familiarity with RVing. I had done camping, but not RVing. And my parents were workaholics.
Mhm.
They built a ranch from scratch. When I was 9 years old, my dad graduated from college and got a teaching degree. And his dream was to own cattle and have a
Oh,
ranch.
wow.
So his first teaching job was in Smithville, Texas, a rural area. And the reason for that was because he used his veterans benefits to purchase land with the VA loan program. In Smithville, Texas, he bought 150 acres. And,
Oh my gosh, that's
uh,
amazing.
so every time he got a paycheck, we'd be going to the auction and buying another cow.
Right. One
And
cow at a time?
yes,
Oh my goodness.
And in Texas,
This
sometimes,
is like the American West dream,
yeah,
right? That you get the education. So you were 9 when he graduated from college?
yes. Uh,
There's a story there that you're not sharing.
Uh, my dad met my mother when he was in the Air Force. He was a country boy from Texas, grew up on a cotton farm, and joined the Air Force and was stationed in Chicago, where he met my mother, who was a city girl. Brought her back to Texas.
Boy. Oh my goodness. Okay.
We've never seen big roaches like we have here. Uh, just had
And a lot of other
a
things.
lot of surprises, yes. She was an only child. My father came from a huge family, and when she went to visit him for the first time, they still didn't have running water or
Oh,
electricity. They had
wow.
an house, so it
Wow.
was a big surprise. But so eventually, she got used to Texas after a few years and having a couple of babies, me included, uh, and so when we were in Smithville and he bought that land and we started getting cows, then we had a severe drought that year, which Texas
Oh,
has every few years. And that winter, half of our herd died. It was a tough,
how large was it, do you know? At
the
that,
herd.
yeah.
I think we had gotten up to 10 or 15 cows at that point.
Okay. Oh my gosh. And they just couldn't, there was nothing to drink. There,
Nothing to eat.
oh,
There was no
oh
grass.
my God, that's so sad.
We, we,
Okay.
we
Yeah, we're
didn't have
talking about real ranching here now.
we didn't have a large hay crop to hold us over because we had been building fences and barns and everything to create the ranch all this
Right.
time. And I was basically my dad's ranch hand. And but he eventually did okay with it, and eventually started buying and selling land on the side. He became a real estate agent also because couldn't really make it on a teacher's salary, and the cattle business wasn't doing that great yet. So over the years, he built up that cattle herd to over 200 cattle and his acreage to over 2,000 acres. And he continued to go to school, getting his master's degree and working on his doctorate. So that was going on the whole time I was growing up.
Wow.
And he was working
Amazing.
always working 2 or 3 or 4 jobs. And my mother would work too. And they eventually had 4 children. And so the theme was work at our house.
Right. Yeah, for
And
sure.
so when they bought an RV and they left, they started leaving each summer to go to either New Mexico or Colorado during August when it's in the 100 degrees here.
Yeah.
And that impressed me. I thought there's something with RVs, there's something with this industry. And I started to look into it and I realized that this is an industry where the small business primary asset is real estate. Oh,
Ah, fascinating.
maybe I can do SBA loans for these guys. So I went to my first convention. I guess that was when Ojai was still, what were they called previously?
I can't believe I just forgot because it was
Yeah.
just like 2 years ago they changed.
Yeah.
Oh my goodness. Well, it worked. It
And,
was
and-
great.
and- yeah, and then I found Taco, the Texas Association of Campground Owners, and so the company I was working for, Business Loan Express at that time, started sending me to all the trade shows, and I started developing that specialization. And eventually, after that, after being with that company for 14 years, they shut down during the economic collapse in 2008. So at that time, I went to work for a credit union in Houston. I was there 8 years and built an SBA program there. Because I was with a credit union doing local lending, I didn't have a national platform anymore. So I kind of got away from campground and RV park lending. But when that credit union decided they didn't want to do business lending anymore, they wanted to go back to a traditional format with just consumer lending. I left and I joined a bank out of Atlanta called Ameris Bank, where I developed their national lending platform for RV parks and campgrounds with
Wow.
SBA loans and USDA loans. And after being there 8 years, I started getting really old and I semi-retired. I took off a few months, traveled to Europe with my wife, but I wanted to get back in the game because I really enjoy working with campgrounds.
Oh
And
my goodness. I never knew all this about you. Keep
so,
going.
so Paul Bosley at Business Finance Depot was a friendly competitor of mine when I was at Ameris Bank.
A
And
friendly
so
competitor. Okay.
So I joined Paul in Business Finance Depot. And so now, instead of having just one bank loan committee that I've got to satisfy, if I can't get it done at one bank that we represent, I take it to another because we're not a bank. We're a mortgage company. We represent banks. We
Mhm.
act as their front end underwriting and marketing department, and we're compensated by the bank. So my clients get my services and my old man wisdom and expertise for free because we're
Oh,
compensated
wow.
to the lenders. And we act as a matchmaker, finding the best lender for a campground. It's very important to identify lenders that have an appetite for campground lending because a lot don't. And if you can find a lender that has an appetite for campground lending with SBA and USDA loans, that's even better. And so that's what we do. And banks' appetites shift a lot with what's going on in the economy, how their loan portfolio is performing, who owns the bank, who's in charge of management. So we are constantly seeking new lenders and replacing lenders to have the best SBA and USDA lenders and other types of lenders and funding sources as well for campground owners. But my flagship loan program, even to this day, is SBA for campgrounds. Most of my loans are SBA loans. That's still my primary expertise. But basically, for the last decade, I've been really focused on just lending to campgrounds.
Wow. I just really have enjoyed this story of hearing your history. It's so Americana. I mean, I met someone the other day who's actually a very famous guy, but he also grew up on a ranch. And that, when you grow up that way, it is the core of your work ethic. I mean, it just drives everything. Would you agree?
Oh yeah, I like work.
Yeah,
I don't want to not work, and so that's why this gig has been so great for me because now I'm out of the corporate bank environment. I don't have all of that anymore. I work from home.
right.
I get to travel to all these campground shows and
Yeah,
meet people like you, and it's a
yeah.
lot of fun.
Yeah,
And,
and
and
it's great people for the most part.
for
For
the
the most
most part,
part,
yeah.
really great people. Um, I can't imagine anyone better to work with your history and all that you've done and the relationships and how you know just how to navigate all of it. You are just such a wealth of information. So when you say campgrounds, we're talking about campgrounds, we're talking about RV. I mean, everything right now is like a mixed asset. It seems like very few people are just doing a campground or just an RV resort. They're adding cabins and tree houses and all kinds of unique, appealing, attractive, shiny object, I guess you would call it, accommodations, which is really important because we're trying to create an experience, right? That they want to come back and have another one and another one. So it doesn't like, is there a specific criteria that your campground would have to fall within to just come have a conversation with you?
Yes. And that's interesting. A minute ago, we couldn't remember the previous name of OHI, which stands for Outdoor Hospitality Industry, but it was ARVC, the
Oh, right. Arctic.
Association of RV Parks and Campgrounds.
That's right.
And I found that so interesting when we kind of morphed in away from that into outdoor hospitality industry. But now we're morphing again into experiential
That's
hospitality.
right.
I love that. I think that's
Yeah.
the most descriptive term we can come up with for now.
Yes.
And so, yes, when we're talking about RV parks, campgrounds, glamping resorts, basically to be defined as a small business, they have to fit the hospitality industry classification. A lot of RV parks these days are being designed for affordable housing.
True.
Uh,
Yeah.
they could be affordable housing, workforce housing, student housing, seasonal housing. Those are not eligible for the federal small business loan programs because they're not hospitality. They're not a small business. They're housing. That's another industry sector. There's probably other federal loan programs that would accommodate that. I'm not familiar with them. I've never been a lender for housing projects. So usually that's the first question I ask if it's an RV park. You don't have that problem with a glamping resort. You know that's hospitality.
Right.
But with RV parks, it's important to make that discernment.
Yeah, and even some of the RV resorts, they're having, I don't know what the percentage is now, but 30-ish percentage of the people that stay there are going to be like kind of a longer term monthly. They try to do that, right? To generate more revenue. So, I'm curious, is that something that you guys look at? Like what percentage are of your RV resort are monthly rentals versus nightly rentals?
Yes, that's a good question. And because the SBA realizes that a small business likes to have, they like to have stabilize their income. And if they can have an income stream that's steady to mix with their hospitality income stream that's maybe not so steady, then that's beneficial to the small business. So the SBA allows that as long as the majority of the business is from short-term guests. And the way they define that is very specific. At least 51% of your annual revenues needs to come from guests that stay less than 30 days.
Understood. Yeah, that's an important thing for everybody to understand for sure.
And you could even have more RV spaces dedicated to long term than you do to short term, but the higher rates on the short term may get your annual income majority over 51%, even though,
Good
even though you have
point.
less spaces. Yeah.
Right. And it can be a mixed asset, right? Like they can have cabins or Airstreams or
Hmm?
whatever on there as well that they can charge more for. I saw some insanely beautiful high end, and we're talking really high end tree houses at the glamping show. Did you see those?
This year, I was so busy at the glamping show in my booth, I never was able to leave and go
I
out
know you
back.
guys had, how many people did you have? You had a bunch of people in there, and everyone was how many people did you have? It was
I
like
think,
eight or nine or
well, there were three of us that were Business Finance Depot representatives, but
okay.
then we also had three bankers that we work
Oh,
with
that's why.
that were in our booth with us. And thank God we did because we needed their help.
I know. Well, everybody needs, you got to have the cash to make the dream come alive, as we all know. So we were speaking a little bit earlier about this government shutdown, and I'd mentioned one of my clients going through the SBA process, and it's such a waiting game anyway, and you're waiting. I think it's gonna there, it's in underwriting, and then we're moving it along. I have a meeting on Monday, and and then all of a sudden, boom, government shutdown. And so how does that work? Like if I have my loan, and in this case they said we pushed it through, it's going to be in queue. How do these people hang on? And how long is it going to be? And is it going to be okay? You've been through this before a number of times, I'm
Several
guessing.
times, yes. Government shutdowns, they happen and they are eventually over. And That's when all the government workers go back to work.
Yeah.
What's needed with an SBA loan is a loan number. Same thing with USDA. Um, What's unique about SBA is that SBA has designated certain lenders that do a high volume of successful SBA lending with losses, low default rates. They
Hmm.
award them the preferred lender status, which means
Oh,
they can approve the loan on behalf of the SBA. And you don't have to go through a second round of approval. And most SBA lenders have that designation now. But even though they have the authority to approve the loan, they still have to submit the whole SBA package to the SBA and say, look, we've completed it, we've approved the loan. Will you now issue the SBA loan number? So
I,
that's
okay.
that's what your client was waiting for.
Oh,
Some banks will rush that in anticipation of a government shutdown before they complete full underwriting, just so they can get the number. But
that's what happened, I think.
in this case, they didn't get it in time. They're still
Oh,
waiting on the number.
right.
Uh, so even if they've completed underwriting and have loan approval and everything, they'll have to wait till the government opens to get the number, and it should be issued pretty quickly once the government reopens.
Right.
And then
Everyone
they can start
just
loan
chill
closing.
out.
Yeah.
Everyone can rest assured. You're so calm about it. These people are like, we want to put a shovel in the ground. We just want to get started, right? It's really a challenge as you know, there's so much involved when you're starting with just a green field. It's not dissimilar to starting with that land and we bought one cow, right? It's a long process of building a resort. So how often do you work with greenfield development versus like buying a campground that's already in existence and then just CapEx projects, or how does that work?
Yes, we finance startup businesses as well as acquisitions of existing businesses, expansions of existing businesses. It's much easier to lend to an existing business because you can look at the tax return
Yeah.
on the business, and you can gauge the cash flow that's available to make loan payments based on historical performance. And yes, there may be a new owner or a buyer who's going to tweak that and make it better, and their financial projections will look better than their historical performance. But to the degree that you can rely upon repayment ability based on what they've done historically, that makes it much easier for the lender to approve. The hardest type of loan to approve is going to be, ground up new construction,
Yeah.
starting with the greenfield and everything, because you not only have the risk of relying upon financial projections to prove repayment ability, but you also have risk associated with construction projects.
Yes.
We've had so much trouble with rising construction costs in the last few years that even though we'll build in maybe a 10 or 15% reserve for contingencies and on the construction and add that to the loan amount just in case they have change orders or cost overruns, that hasn't been enough sometimes. And so that's a risk that the borrower and the lender face and has to be factored into loan approval. Um, and so when we're lending to a startup business, that's when the lender is really looking much more strongly at the borrower's credentials. Have they owned and operated a campground or a glamping resort before? Well, oftentimes they haven't. And if they haven't, then we're looking for related business management credentials, or we're looking for personal financial strength, other investment assets, other sources of income to fall back on if they're slow to meet projections.
Mhm.
Anything to manage the risk for the lender, those are the things that we're looking at.
Yeah, that makes a lot of sense. So, what do they need to come to you with? Let's say I'm going to buy a campground here in Colorado. Obviously, it's the beauty of it is a business loan, right? So you're looking at it as a business, and
Yes.
then but you're looking at the primary asset as being the land. Is that correct? Yeah, that makes
The land and its improvements, yes.
right. Yeah. Okay. So they need to come, I mean, what's the application process like?
We're going to be looking for a business acquisition. There's two sides to the equation. We're looking at the borrower and their credentials, and then we're looking at the seller and their financial information. So the most important information from the seller is the tax returns because we can actually take the last 3 years' tax returns. We can make adjustments to net income, like adding back depreciation because it's a non-cash expense, adjusting what the owner's compensation needs to be, based on comparing what the seller paid themselves and what the buyer needs for themselves. Identifying any large non-recurring expenses in the past that we might add back to cash flow in that year. But we get an adjusted net income figure for each year after making those adjustments. And we divide that by the proposed annual loan payment, and that gives us a debt service coverage ratio. That that shows us that the business produces more cash flow than what they need to cover the loan payment and their operating expenses. And we're
Yeah.
looking for a debt coverage ratio of 1.2 or better, which means they've got about 20% cushion in their cash flow
Oh,
after covering the operating expenses and their loan payment. So that's on a business acquisition. But say we're talking about a business startup, there are no tax returns. So what we're looking at is a business plan and financial projections.
mm-hmm.
Well, how reliable are the financial projections? It really depends on the assumptions that
Really?
you attach to those projections. And
Right.
that comes from a market study or a feasibility study, where we define the trade area, we look at who are all the competitors in that trade area, pinpoint all that on a map, and then attach a grid to that, which compares occupancy, rental rates, amenities offered, access to the interstate, just, access to whatever the local attractions are,
Right.
just everything that you can think of to compare so that you have data to support your financial projections and the assumptions behind them.
Yeah, right. I know that let's just say there are conversations out there in this little niche about feasibility studies versus these kinds of just like marketing research. Do you require a feasibility study for this, or is there another like little bit lower level of market research that can be enough? And I ask only because oftentimes people are, it's like, is this concept really going to work? That's what you want to know. That's what they want to know. And a feasibility study, excuse me, can be expensive. It's a big investment. And then they're looking at construction costs. And, I'm coming in talking about buying accommodations and furniture and all these kind of later. Let's worry about all that later. And I just wonder how much is absolutely necessary for them to get a loan. And I know there's a lot of pieces involved, but anyway, do you understand what I'm asking? Feasibility
Yeah,
versus
and
market research.
and some of that depends on the lender and their preferences. But I tell people if you can do the market analysis yourself, let's try that first and see if that satisfies the lender, because the market analysis leads to the feasibility conclusion.
Right.
Uh, and so it could depend on the deal size and the borrower's capacity to repay that. If they have a lot of personal financial strength, other investment assets, and other sources of income to fall back on, then the success of this new business is not as critical as it is for somebody, say, buying a business or starting a business who've given up all other sources of income. They've sold all their assets to get the cash for the down payment and the reserves they need to do this project. That one will have a lot more risk. And so you'll have to have a stronger feasibility study. And so, depending on the deal size, the strength of the personal financial statement of the owners and those things, that'll depend on the level of market analysis and feasibility study that it'll take to satisfy the lender.
Yeah.
For an SBA loan, the SBA doesn't specifically say you have to have a feasibility study, but their their underwriting guidelines would indicate that you're going to have something like that. With USDA, they do require a formal
Okay.
third-party feasibility study that is compliant with USDA guidelines. They've got specific guidelines for the feasibility study. So those can be even more expensive. But then the USDA projects are usually much larger than the SBA.
Right. Sure. That makes total sense.
Because
Okay.
with SBA, we're doing loans up to maybe 10 million, whereas with USDA, we can go up to 25 million per
Yeah.
project.
Yeah, it's a whole different ballgame there.
Yeah.
So, where do you see all this going, the industry? You mentioned that a lot of RV parks or even RV resorts are being purposed for housing because this is such a big deal. I see that a lot. And yet there's still out there there's still people out there developing from the ground up and buying, really aggressively buying RV resorts and operating in hospitality. So what's your take on this? And everybody and their brother and mother-in-law creating glamping resorts, right? Like, oh, I have this land. Let's see what I can do with it. And just around the experience. So that's happening a lot.
Um, I think we're going to see a lot of evolution of things that we maybe haven't even imagined yet. Um, and that's one of the things that makes it difficult for banks to get their arms around is that the industry is so diverse.
Mm,
Lenders love something like self-storage because it's just so, you know, you
predictable.
just replicate it over and over again, and it looks the
Right.
same all the time, and the dynamics are the same, and eventually you get an overbuilding situation, and that's obvious in the market. You don't build a new one there, but when you talk about creating the experience, that's
Yeah.
a whole different realm.
Yeah, it really is.
And I
And
think
how do
it,
you define it and how do you quantify like how do you put value? I just had a conversation, I guess it was in this roundtable. You haven't come to the roundtable. You should come on Thursdays to this roundtable for outdoor hospitality professionals. I don't think you've come yet.
yes, I
Oh,
just haven't been lately. It's just
okay.
been really busy.
Yeah, well, anyway, everyone's invited, but um, he was talking about he was just, I have this land, I'm going to try this out. They have primarily tents, I believe, and just discovered how much more he can charge. So you can't anticipate that. It's really hard now to compare property to property, as you were saying. It's not like self-storage. It's not even like RV resorts where it used to just be, oh, do you have a pool? Do you have a lazy river? Do you have a restaurant? Now it's like, oh, do you have a nature experience that, and there's, it's like a sensory experience. How do you value that, right? And that really is the story that the market tells us. Like you don't even really know until your market tells you. Your guests tell you, I'm willing to pay this, right? There's not a proven template necessarily for this new world of experience.
Right. Yeah. I mean, you might be able to gauge success just because of your proximity to a national park or some
Sure.
destination like that. But when you venture into experiential, that doesn't necessarily have to be near one of these sites. You can create the experience from nothing, I guess, so to say.
Yeah,
But
exactly.
but what I'm seeing a lot is that it is an experiment, and so operators are doing it in phases. Let's just bite off phase one in a chunk that is an experiment that we can afford, even if it's not successful. And if it is successful, then we can go on to phases two, three, four, and so forth. And it's in manageable bites. That's the only way that I've seen people manage that so far.
In
Uh,
terms of risk, like with SBA, I know that I had an SBA loan many, many, many years ago. It was for a retail shop. And then I had a restaurant, like an event center, right? And that was considered very high risk. And so when you're looking at risk, where do you think hospitality, outdoor hospitality fits in there? Like I know restaurants are really high risk. Um, but there are just so many different types of small businesses.
yeah, and restaurants are hospitality too. So
Okay, they fall under the same banner that an outdoor hospitality does.
no,
There's
not
not
really.
land and yeah, necessarily.
Not yeah, but they do involve hospitality. So
Sure.
uh, probably the way the bank manages the risk is by, especially for larger projects, is requiring the borrower to have previous experience doing this, which makes it really hard for people that want to do it the first time, which is why they need to do it in manageable bites or partner with somebody that's got experience. That can be a good way to do it.
I know in the past we've talked about the value of hiring third party management. Like if you don't have the experience, but you're bringing in the experts, like we already have a relationship with a third party management company that's been doing this for a long time, or, we've employed different people to help us build this. So we're just looking to build a healthy business. It's all pretty reasonable and rational, the requirements. It all makes a lot of sense. Bruce, let's go back to kind of full circle here about the ranch. So, kind of this is a personal question, but what's next for you? I know that ranch, tell us about where that ranch is now and what you were kind of thinking about maybe doing someday with that ranch. Because everybody's got a dream, right?
Well, I actually have two ranch properties, and one of them's currently on the market for sale.
Oh, fun.
So what I would do with that is
Sell it.
probably, yeah, sell it and maybe get a different house than the one I'm in. We have our first grandchild who's 2 years old now, and our our children have talked about moving at times, and we might move too. So who knows? I don't. I'm 72 years old now, so a
But
lot of it
you
is.
You were talking about like maybe at one point turning that into a a hospitality property, right?
Yes. Um, and I guess that the other property might go that the one that I'm keeping, I might do that at some point. But I think in that market, it's probably going to be more the affordable housing route than it would be the hospitality route because there's a huge need for that around Austin.
Yeah, everywhere. There's just a huge need everywhere. So would you do like tiny homes are a big thing right now, the tiny home communities.
Yeah, my mother would love to see me do something for an elderly community. She'd like to see an elderly tiny home community.
I think that's a great idea. All
She's
right. Yeah.
she's 91, so she thinks about those things.
Yeah. Everybody's thinking about those things. And honestly, um, I'm sure you've met Chris Penn, who comes to the round table and he promotes these tiny home communities all over the country with marketing, social media, and everything. And it is amazing. Like he does all the data and research on it and was talking about how I think it was women who are like 50 years and older, single, that's what they want. And that makes sense. Also, young people, first time home buyers, that's what they want because that makes sense,
Mhm.
right? More affordable. And now you're saying your mom in her 90s, they want community but independence, right? So it seems like a viable solution to a lot of challenges. Are these just little spaces where it's not really different than having like a dispersed hotel where you have
Mhm.
all the amenities, but you have your independent privacy. So yeah, a lot of stuff happening in the world. And
Yes,
you're
it
gonna fund
is.
it. You're gonna fund it all. Yeah. Oh, Bruce, I've enjoyed this so much. Do you have a burning desire to share anything else today? Any tips or wisdom or what people might be asking themselves of how in the world do I do this?
I think educating yourself about the industry, the way I did, going to the conventions and trade shows, there's just an excellent selection of state, regional, and national conventions and trade shows for campground, glamping, RV park owners. And there's one coming up in November in Louisville, the national convention for OHI, and I'll be there. And that's an excellent place to get, not only the education, but certifications and meeting people in the industry who are experts and who you can call upon.
Yeah, great.
People like you.
Yeah, and people like you. Yeah,
Exactly.
and really, it is really true that generally speaking in the industry, everyone is so collaborative and open and willing to share what's worked. You'll find people that have portfolios and people that are just starting. So it's a pretty diverse group that shows up there, at least as I recall. But
Oh,
you
yeah.
know better because they come to your booth. They're
Yeah.
all talking to you. All right. Well, thank you so much for your time and your knowledge and wisdom and sharing and everything today. And I'm sure this is a lot of really great information for anyone and everyone who's watching. And we will do this again. Okay.
Thank you so much for
Yeah.
having me.
Thank you.
Always a pleasure.
Thank you so much, Bruce. Have a wonderful day.
You do the same.